What's going on? Today I am going over my 5-step plan for investing in 2023. A couple disclaimers about this video before we get started. This is not financial advice. I'm just some guy on the internet. This is the plan I am taking in 2023. I wanted to share it. Please don't take it as financial advice. This is just for entertainment purposes. All right, let's get started. Number one that I'm going to be doing this year is stacking up cash, okay? Very important to keep a cash reserve of, most experts say, about 3 to 6 months of expenses in the bank. This is, a great way to just make sure that you have a little bit of a cushion in case anything goes wrong. I personally keep my money in Wealthfront. Right now they have a 3.8% in a online savings account. Basically, it's completely liquid, and you're making 3.8% APY on your money, which means every year you get 3.8% on the cash that you had in there. So instead of keeping it at your house or in a regular bank like Chase or Bank of America, you can put it in a high yields online savings account, and it'll be better saved there. All right, so after that, after you save 3 to 6 months of expenses, you have a good cash amount in the bank. You want to move on to what I would be doing is step number 2, which is maxing out a Roth IRA. I'm going to do an entire video on what a Roth IRA is and compare it to a traditional IRA. But the basics are that a Roth IRA, if you expect to be in a higher tax bracket when you retire, you want to put your money into a Roth IRA because you're putting in post-tax money, and when you pull it out when you're 65, it'll be tax-free basically. In a traditional IRA, you're putting in pre-tax money, so money that you make before it's taxed, you get to put it directly from your employer into a traditional IRA, so it's pre-tax, and then when you pull it out when you're 65, you get taxed on it. But the whole point is, if you are expecting to be in a higher tax bracket when you retire than you are now, which most people should, then you should do a Roth IRA. Now, if your company gives you a free match for a traditional IRA, you should do that. Always take the free money. But in I think throughout the US, $6,000 is the max for the IRA that you can put. Every year I put that amount just as a safety net. So when I'm 65, I'll have that money, $6,000 a year over the course of 40 years invested. It'll be at least $1 million, over $1 million, depending on when you started. The key with that is to get started early, to do it as soon as you can, and make sure that your money is in there and has time to compound, and that it will be done when you're 65. You'll have a decent amount of income. Okay, number 3 that I'm doing this year, and that I think most people should do when they start investing, is invest in index funds. Okay, I see a lot of my friends, they invest in single stocks, they invest in crypto, but none of them are invested in index funds, which have historically proven to be the most consistent, successful, and about 12% a year, depending on which index fund you choose, over the course of a 30-year span. So that doesn't mean that you're going to make 12% next year. That means over the course of 30 years, you make 12% a year on average. Some years are going to be really horrible, negative. Some you're going to see 30, 40, 50% gains. Okay? An index fund is a fund that tracks a certain segment of the market. So, for example, VOO tracks the Vanguard Total Index Fund, I believe, or maybe that's VTI. But anyway, I'm going to do a whole separate video on that. But basically, an index fund is a fund that has a bunch of other companies inside of it, so it tracks everything. So an S&P 500 is a great example of an index fund. It tracks the top 500 companies in the US, and that's the S&P 500 index fund. That's one of the next steps that I'm going to be doing, okay? So like I said, a lot of my friends, they're investing in single stocks, they're investing in crypto, but they don't have anything that's proven over the course of 30 years to traditionally return 12% a year, okay? You can bet on single stocks. Who's to say they won't go out of business like Enron did and a bunch of other companies? Sure, a lot of the big tech companies like Apple, Netflix have done really well over the past 20 years, but you're putting all your eggs in one basket. Whereas when you buy an index fund, you're diversifying. Okay, so that's number 3, is buy index funds. Now we get on to the interesting stuff. Okay, I think for the first 5 years of investing, you should only buy index funds. You should truly understand what they are and really dive into it. This is what Warren Buffett suggests. Like, first 5 years, you should only do this. The most successful investor in all of history, he says you should only buy index funds because single stocks take a lot of time. You really have to understand the company, and you have to do a lot of research in order to be successful because it's really hard to pick winners, okay? But number 4, like I said, is investing in crypto, in stocks. That's what I'm going to be doing on my 4th step. Like I said, this is not for some. It's not completely gambling, but it is a lot harder to do than to just put your money in index funds. So crypto is pretty down right now. Obviously, at this time when I'm filming the video, I expect it in the next couple of years to continue to rise up. So I'm going to be purchasing a little bit of Ethereum and Bitcoin, as well as investing in some single stocks that I've found to be successful over the past couple of years. I bought a lot, for example, I bought a lot of Delta stock back when the pandemic hit at $20 a share, and I believe I ended up selling at $60. I don't know what it's at now, but these are examples of companies that I see that have a lot of cash on hand, that are primed to do well over the next couple of years. A lot of different factors. That's a whole different video by itself, but a lot of different factors go into choosing a stock like that. So that will be more to come as well. But yeah, so that's the 4th step, investing in single stocks and crypto. And then the last step that I have here, step number 5, this one, it could be interchanged a little bit higher depending on what you're working on at the current point in your life. But this last one is investing in businesses or investing in yourself. So for me, I'm currently running a dog care business. The next step of my business is to expand and to open a boarding facility. I'm saving up money for that. I'm hoping to have a couple potential partners to work on that with. And that's a next big step for me. So that maybe not be the case for you, but whatever that next step it is for you that you want to do outside of your 9-to-5 job, whether that is drop shipping, whether that is making logos on Etsy. I'm not sure what it is for your specific case, but I'm also going to do a video on side hustles and things that you might consider while doing that. Rover is a big one. That's what I got started on. That's how I started my pet care company. And so yeah, maybe that's something you want to invest in. Maybe that's buying poop bags for your walks. Maybe that's buying leashes, whatever that might be, to get that business off the ground. That's all I have for you today. Those are my 5 things that I'm going to be doing this year to be successful in investing. All those 5 things, those, like I said, those are just the things that I am personally doing. And this is just for entertainment purposes only. But I think if you follow similar principles to what I've outlined here today, that you'll have some success as well. Thanks so much for watching. I'm looking forward to seeing you in the next video. Take care.